Hey, what's up? Today is September 29th, and here's another market update video. So let's start with the macro. The stock market is still really strong. It's still holding above its all-time high here at a pretty good level. If we measure from the previous all-time high to the current price, it's still up about 8 something percent, right? So the stock market has been doing pretty well for the year. And it still looks good for the next 6 to 12 months, in my opinion. What we don't want is a big trend reversal like this. And this would probably happen when the Fed starts to tighten monetary policy once again. If you have been keeping up with the markets, we are still in the phase where the Fed is cutting rates, loosening the monetary policy, adding more liquidity into the market. So this should have a positive impact on assets. And it doesn't mean that the economy would be good, right? People could be losing jobs while the market drifts up. And this is largely because when the rates go down, there's a lot more liquidity in the market, and there's not as many good places to park the income that you earn, right? And in addition to that, businesses could take out leverage. They could loan money for much cheaper to fund growth. This is why if we see growth and lower rates, risk on assets like stocks would typically go up pretty high. Same thing with crypto. And now that there's more TradFi adoption, I do believe that the crypto market is going to be closer and closer to the stock market. So for the lower cap stocks, this is a pretty good indicator of the risk in the market. You can see it's still trading near its all-time high. It hasn't broken out yet, just like how Ethereum has not broken out yet. And we'll dive a little bit deeper into that. And you can see the 10-year yield is kind of coming down a little bit, but it's not really cracking down that aggressively yet, like what we saw in COVID. For example, in 2014, the 10-year yield did drop from 3% all the way to around like 1.4, 1.5%, right? So if we do see the rates drop from 4 something percent to around 3%, I think that's a good target, especially if we don't see a black swan event. And we're seeing the dollar index keep dropping as well. You can see it's still below this 10 and 20 period exponential moving average on the weekly chart that we've been tracking. So this is a good sign for a risk on environment because these assets are denominated in US dollar, right? The stock market is denominated in the US dollar, meaning that if the US dollar is weak, the stock would move up in price in US dollar terms. And a lot of it is not going to be like real growth, right? A lot of it is speculation and also inflation that is baked into the price. And we're seeing a breakout in gold still. It has not cracked down. And this is typically not a good sign if it's coupled with a lot of fear and uncertainty. But in my opinion, this is just from the effects of the Fed's cutting rate and people pricing in inflation. So gold moving up is completely normal here. And if stocks move up as well, that's typically a good sign for risk on assets, rather than gold moving up and every other asset is moving down in price. So let's take a look at the crypto market here. The total crypto market cap is still at around $3.8 trillion. Is it going to move higher? I believe it is in the next 6 to 12 months. You can see the RSI is not as overheated as the previous cycles yet. And the MACD, if you see growth, this should move higher as well. So still waiting to see, and the risk and reward for holding on to crypto is still pretty good, especially for lower caps and altcoins. If we look at the total 3 chart, it has not had like a clean break yet. And the total 3 is just excluding Ethereum, including all of the altcoins, right? And what you will notice is that a lot of liquidity does flow to newer altcoins. It's not going to go into all of the old altcoins like maybe Litecoin, Monero, stuff like that, Polkadot. So we are going to be seeing some new winners in the altcoin market as the market changes and adapts. But to me, it doesn't make sense to sell all of your coins right now. It does make sense to start adding stable coins to your altcoin portfolio though, if you are very altcoin heavy, or even if you're like 100% into Bitcoin. I do think it's a good idea to add some stable coins just to scoop up some deals when the prices do draw down. So we never actually know if the prices would break out right now in the next 6 to 12 months. But if you expect the crypto market to grow, then we will expect the price to break out in the long term, right? So this is what I'm looking for. And the next target is around like 1.69 trillion and maybe $2 trillion for the cycle top. And this is on the log scale. So if I turn it off, $2 trillion is actually quite a big amount. And for the others market cap, we're still nowhere near its previous cycle high. Smaller caps do tend to lag behind by quite a lot. When the market is really risk on, then we could expect this to go rapidly, right? And even comparing to 2024, 2025 has been a pretty rough year for altcoin investors, simply because not a lot of people are buying alts and a lot of people did lose a ton of money on meme coins. So we'll see how the altcoin market is. And if the rotation does happen like previous cycles where people rotate from Bitcoin into Ethereum and then Ethereum into larger caps and then larger caps into these smaller caps, then we would expect that these smaller caps would pump the last, right? But what I would expect is that these smaller caps would at least test the previous high at 500 billion. So from this current point, it's still about a 66% gain. And if you expect a bigger altcoin market, I do have a target at around 750 billion to 1 trillion. I think that's a pretty reasonable target for like a diminishing return type of market. So the risk and reward is still pretty high for holding on to altcoins. If you believe that the market is growing and that crypto adoption is happening and more liquidity is coming into the market. And a very important chart that we have to keep an eye on is the Bitcoin dominance chart. Again, on the monthly chart, it is swinging down. We do have that MACD cross and the monthly chart doesn't actually change that much, right? But we do have a monthly close coming up in the next few days. It's not going to be that significantly different, in my opinion, unless we see a pump back up to 60%. But in either case, if the Bitcoin dominance still stay below this 60% mark on the monthly, I think that's a great sign for altcoin investors. And if we drop down to a weekly chart, everything still looks fine. We're kind of moving sideways in terms of Bitcoin dominance. You could argue that it could be something like this or something like this that we saw in the last cycle, right? Where people are taking positions. Maybe there's some uncertainty about altcoins still. In my opinion, it all depends on how Ethereum does. If Ethereum cracks down really hard, drops below like $3,000, then we could expect Bitcoin dominance to rise simply because Bitcoin would not drop more than Ethereum in most cases. But if we do see Ethereum breaking its all-time high in the next 6 months, what we would expect to see is a sharp drop in Bitcoin dominance. Again, Ethereum is much larger than a lot of these other altcoins. So its price movement is actually very important when it comes to dropping the Bitcoin dominance. And what we can also track is like a combination of dominance. For example, Ethereum plus Solana plus BNB. You can see right now, these large chains are holding a roughly 20% dominance. So not really close to its previous cycle high yet. We do see a huge run up to about like almost 30% on these three large altcoins in the last cycle. It's still debatable how far we would run this cycle. Maybe it would even set a new high if we see an explosive growth in the altcoin market cap. Again, altcoins are still riskier than like just buying Bitcoin. But in my opinion, the risk and reward is still pretty good at these price levels. I'm not going to be buying the whole amount if I'm entering in the market right now, right? Because we are trading in the middle of the range for a lot of these altcoins. For example, Solana is trading at $200. It's between that $300 to $100 range, right? So it doesn't make sense to do a ton of buying decisions right now. But if you have too much stable coins, then it could make sense to look for buying opportunities or even to buy in right now rather than to wait for the ultimate bottom to buy it. So we can't really tell for sure what the market is going to do. For example, Solana does look like it's slowing down on the weekly chart, but on the monthly chart, it's still looking very bullish. And if we look at the daily chart as well, it's still kind of holding this trend line, right? So with this price action, it's not as clear. I did have a client position that I helped manage. We entered at around 176 for sold to USDC. We exited at a non-greedy target of $250. So that was pretty nice, a roughly 20% gain on our capital. And that is the type of opportunity that we could be taking for our mid to short-term positions, right? For example, if you guys are providing liquidity for stuff like pump or hype and stuff like that, You don't have to hold for like the ultimate altcoin season pop. You could be taking profits along the way. For example, for the pump and USDC pool, I'm using most of the fees that I generate from this position to accumulate more stable coins so that I reduce the market exposure risk the longer I'm in this pool. And it also is important to note that the market is shifting towards more like a fundamentals approach rather than like a very speculation heavy approach that we saw in 2024. Last year, the market was mainly driven by pure speculation, right? We see a ton of meme coins like Bonk, with all go to really high valuations. But right now, the market is more calm and it's more fundamentals driven. Of course, there are like really hype narratives that you could chase, but you got to be a bit careful about that. For example, SPL here, if you guys are yield farming these tokens, it could pull really high yield, but you want to make sure that the assets you're accumulating or yield farming are actually solid assets and not blind yourself by the yield, right? My suggestion is to do as much research as you can into the project before like actually calculating their yield and see how much you can gain from there. The reason why is because you don't want to be blinded by the yield and make bad buying decisions. And it's always helpful to make like a list of different assets that you could be buying to compare and contrast which one is the best investment decision, right? For example, Aster has been really popular, but the yields have been dropping a little bit, which is expected. If you enter really early, you would be printing a lot of yield, right? But with these new tokens, something to consider as well is that oftentimes the volume is not going to sustain. When the hype dies down, the volume dies down as well. So that's something to consider. And if you guys are entering into these altcoins, again, you want to make sure that it's something that you want to be buying and holding for the next 6 to 12 months or even years sometimes, because you never know what these altcoins are going to do. And if you are just looking for like a shorter term trade, you could just use perps or just buy and hold spot bags to make sure you take profits more aggressively rather than trying to yield farm, right? If you guys are yield farming, you do have to be exposed to the token for quite a while to make your return. So that's something to consider. And I did make a video on my YouTube channel on like a hedge setup using Aster as an example, which could be great if you don't want that much of a downside risk. So from a market perspective, in my opinion, everything still looks okay. Ethereum is still holding on to that $4,000 level. We did not close below $4,000, but ideally we want to see some more strength on Ethereum. Hopefully these moving averages do catch up and provide some sort of support as well. And I do believe that Ethereum would break the previous all-time high sooner or later in a clean break. And if we do get a price discovery on Ethereum, I believe a lot of altcoins are going to move with Ethereum as well. So that's pretty much my market outlook. And again, your strategy could be very different from mine depending on your own goals and your portfolio allocation. For example, I have a really altcoin heavy portfolio because I am more comfortable taking on losses and betting heavily in some scenarios. But your portfolio could maybe be somewhat more similar with my client portfolio, where it's like basically 80% blue chip assets, right? And then maybe only 20% altcoins, right? So that's something to consider. And for smaller portfolios, we don't really want to spend too much time to like over optimize these pools or anything. That's why I prefer wider ranges. I don't think it's worth your time to be like squeezing the range to take too much risk, especially with a small portfolio. If you're trying to live on it, the yield is often not sustainable. And if you take on too much risk, you're just going to end up losing money in the process. So I hope that makes sense, guys. And I hope this video was helpful. Again, if you have any questions, feel free to reach out and post your questions. I'll try to get back to you as soon as I can. Thanks for watching. I'll catch you next time.